Good afternoon. It didn't turn out to be such a bad market after all. This is Midcap Radar. I'm Sonia. With me is Mangalam. Well, Friday the 13th started off as Friday the 13th would. And now there's a big recovery in the market. So not a bad Friday after all. In fact, the Midcap index is now also turning into the green, but the front line, the indices have staged a massive recovery.
It's a massive recovery that they've staged. The important part is that we're closing in on that 18,000 mark. The question is whether it sustains here or not. But for now, it is a good recovery. Let's talk about the markets in just a bit. All the top stories that we're tracking right now comes about. Market edges higher after stocks rebound from sessions low, even as mid-caps underperform, though off lows.
MCX gains on hopes of a volume boost from new contracts after SEBI allows multiple base metal contracts. IT is the top F&O gainer today.
Coal department, and we do see some gains come by. L&T Tech becomes the biggest F&O loser as analysts remain iffy on the benefits of its acquisition of parent L&T's next-gen communications business.
And Coal department surges on a strong business update, delivers record sales in the third quarter as volumes get a boost from the launches in Mumbai and Pune.
Gujarat Gas slips post a downgrade coming in from Jefferies. The brokerage cuts its rating to underperform, slashes the target price as well.
And mid-cap PSUs, ITI and RVNL jump on order wins. The stocks are up over 5%.
Right, it's a massive recovery that we've seen from the frontline indices, and that's on account of two factors. One is the big recovery that we saw on Infosys from lows, in fact, almost 3.5% from the lows on that counter. The street likes the deal wins and the fact that they've upped their guidance a tad. And, a lot of people now believe that there could be case for some discount narrowing between TCS's valuations and Infosys. So that stock at the high point of trade, taking higher the IT index along with it. And as a result of which, Wipro too, which reports its numbers today, likely post markets, has moved to the high point of trade. The other factor, which was the Nifty bank, which was an underperformer, has now moved closer to the high point of today's trading session, which is also very close to its 50-day exponential moving average. So let's see whether we run the risk of getting into some sort of resistance zone or not, because we have been in this band and we've been, just meandering around choppily in this band. So
I think the good part is that the December lows are holding, right?
Yes.
I mean, for the index, that is the crucial thing to watch. And for now, at least the December lows are holding. Let's see how the rest of the day shapes up. But just a couple of more stocks. Satya Industries is the stock on our radar. Now, for the uninformed, this company manufactures wood and agro-based paper in India. So the company recently won 3 major contracts for the supply of paper for printing textbooks. And the total volume of these contracts is around 17,000 tons, which is worth 200 crore rupees. Rajinder Kumar Bhandari, the Joint Managing Director of Satya Industries, joins us now. Mr. Bhandari, good afternoon and thank you for joining in. This order that you've won to the tune of 200 crores, tell us a little bit about when do you need to execute this order by, when will it start to flow through in your revenue stream, and what does this take your total order book to?
Yeah, these orders will be executing in the last quarter of this financial year. And after these orders, we have got another big order of almost 11,000 tons from another textbook board, which is worth over 100 crore, which too will be executed in the last quarter only. And the price realization is almost 10 to 15% higher than the present realization in the market. So presently with the new order and that 17,000 ton order you mentioned earlier, our current order book is over 50,000 ton of paper, which is almost 3 months production.
So what does that do to your revenues? Because you're talking about 300 crore worth revenues being recognized in the fourth quarter itself. This is the orders that you won for this fourth quarter execution, but I'm sure you are delivering other orders as well. The first half of this year, you've done revenues of close to around 900 odd crores. Do you think you'll be able to do better in the second half? What are your thoughts for the entire year and margins?
Yeah, we shall be doing almost over 500 crore plus revenue in the last quarter. And the same is likely to continue in the first quarter of the next financial year.
Okay, so 500 crores is what you've done in Q2 as well, and you're looking to do that even in the last quarter of the fiscal, right?
Yeah.
Okay, so that's a quarterly run rate. At any point, would you look to scale that up? Because I understand that you have an expansion plan in the wood pulping capacity. By when will that be operational, and what will that take your total capacity to?
Yeah, we are expanding our wood pulping capacity from 180 ton per day to 300 ton, and that project will be completed by the end of this financial year and will be operational in the first quarter of the next financial year. With that, we will be able to phase out pulp made from the waste paper, and it will add to the cost savings by almost 5,000 rupee per ton of pulp cost. So that will add to our margins in the long run, and also add to the quality, because wood pulp quality is always better than waste paper pulp quality. Yeah.
Right. So what does that mean for your revenues then in FY24 and FY25? I mean, if this plant, which, effectively doubles your capacity from current levels, comes on stream with higher margins, etc., what numbers are we talking about in terms of revenue and margins for FY24 and 25?
Yeah, financial year 23, we should be doing near 2,000 crore. And financial year 24 and 25, 10%, 10 to 20% increase in both the years. So we should be reaching anywhere around 2,400 crore in the financial year 25, provided the paper prices, they stick to the same level.
And margins?
And margins will be anywhere, the EBITDA should be near 20 to 25%, and PAT should be anywhere between 10 to 12%.
20 to 25% margins. That's quite a bit. I mean,
Yeah,
in the first half, you did just 18%. So by when do you think you can get to 25% margins?
Yeah, because as I told, if we shift from waste paper pulp, because we are far away from the port, the waste paper pulp costs us almost 5,000 rupee per ton higher in cost. So once we shift to wood pulp, which would be cheap and which would give better quality, so that may help us get better price realization also from the market. So both these factors, plus we are putting up a new boiler also, which will be replacing presently the present fuel of rice husk to rice straw. The cost of rice husk is almost 7 to 9,000 rupee per ton, and the cost of rice straw, which farmers burns in the north, which creates a lot of pollution in Delhi and other areas, so that costs us just 2,000 rupee a ton. So all these factors together, they will increase the margins in the coming years.
Right. Another thing that I wanted to know from you is that you have paper cutlery production as well, which you've planned. I mean, we've been seeing a lot of shift from plastic to paper in straws, now cutlery, etc. as well. Can you tell us, when does that plant go on stream? What is the potential revenue from that?
Yeah, we are already having 2 machines of 2-ton capacity, and the 2 machines will be dispatched on 28th January to our plant. And by 31st March, we will have a operational capacity of 4-ton cutlery per day minimum. And in the next first 2 quarters of the year, in the next financial year, we are getting 4 more machines of 1-ton capacity. So total, we will be having more than 8 to 10 ton of cutlery capacity per day. So that will lead to a revenue of almost 50 crore with an EBITDA margin of 35 to 40%.
So for this... Sure.
Yeah,
sorry, I didn't mean to interrupt you, but for this capacity expansion that you're doing, do you have enough funds? Will it be purely from internal accruals? Would you need to tap the market at any point?
Yeah, cutlery, we already had the infrastructure in hand because we had entered long time back with the Zoom. Stock preparation was already there, and 2 machines we had. The 6 machine cost is just 10 crore. So once we start this we are doing only on pilot scale. So if margins are good and sustainable, then the management may go into this segment on higher scale also in the coming years. So finance is no issue. Yeah.
And final question from my end, we look at your shareholding pattern. You've been talking about strong growth in your company. You've been talking about the potential, etc. But no institutional investors hold any stake in your company. And this despite you meeting a lot of them. I mean, I see all the notifications on the exchanges. You've met Sage One, Yes Capital, You're meeting Kotak and Motilal Oswal today, etc. Why is it that institutional shareholders are not yet investing in the company, or can we hear something like that in the near future?
Yeah, maybe you are right. Maybe we could not make ourselves visible in the past, and with you giving us an opportunity today, the people they are coming to know Setia industry in the last 1 and 2 years more and more. Because earlier, when we used to listen to paper industry, maybe Setia, which was making even 100 crore plus PAT, wasn't ever mentioned. But CNBC has given this opportunity to us. I think more and more people will know us, and definitely they should come, I think.
Okay, all the best. Thank you so much for joining us. I think the street definitely liked what you were saying, because through the course of the conversation, the stock has gone up 4.5%. So good luck with your capacity expansion and good luck with your business as well.
Also, and he said that CNBC has given him the opportunity to, talk about his business, etc. At the same time, it's a responsibility as well,
Yes.
because he better deliver on the numbers that he's been talking about and corporate governance of the company. And we'll also watch out for whether institutional investors actually go ahead and invest in the company as well. Plans so far great, but let's see whether they execute or not.
And on the stock, the delivery has been good, right? I mean, it's up, what, 40% in the last 1 year itself. So the stock market perhaps recognizes the opportunity here. Well, all the best once again. Let's take a quick break. On the other side, Mitesh Thakur will be joining in for some technical trades. So keep it with CNBC-TV18.
Welcome back. The up move of the market continues. The Midcap index is all but just moving into the green as we speak. Advance decline firmly in favor of advances now after being at an even keel for most part of today's trading session. So 1,800 stocks in the green for about 1,000 in the red. BEL has moved to the high point of trade. Emphasis, Rain Industries. Well, it is a sea of green right now that we see across broader markets. We are seeing a stellar recovery. So good time to get in Mitesh now. Mitesh, we've been, hovering between this range of 17,770 and closer to 18,000. Do you think this recovery from the lows has the risk of running into some sort of resistance, or maybe now we can see some short covering? What are your thoughts?
So my belief is that the way the last 1.5 hours panned out, it appears that 17,800 is holding, and therefore I think there's a higher chance of short covering and a pullback rally happening before the market kind of tries to go down. So I think once we start getting past 18,150, which was the high which we made on the 9th of January or Monday this week, then I think there's a good chance that we are looking at 18,250 being revisited and eventually maybe even slightly higher levels. So in that sense, I think shorting may not be the best idea. We should be looking at identifying and getting into more of long trades on stock specific basis as well as on the index.
All right. Any individual stocks that you like?
On the stock side, I would recommend buy on Federal Bank. I think that's a stock which is broken out very nicely. So that's a buy with a stop at about 134.5 and a target of around 145 on the upside can be looked at.
Okay, all right. Thanks a lot, Mitesh, for that. Well, let's do one thing. Let's take a quick break. But here's an important information piece for our viewers. Don't miss out on the 19 must-have stocks for 2023. If you want to find out more, all you got to do is subscribe to Money Control Pro to get the full list. Welcome back to Midcap Radar. Now, on our Midcap Spotlight segment today, we have the stock that's flashing for you on the screen, which is Colte Patil. It's having a whopping 13% rise, and that's because the Q3 business update was spectacular from the company. Now, the company has reported its highest ever quarterly sales of 716 crores in a single quarter, which is a growth of almost 30% year on year. Now, if you look at the sales volumes as well, it's come in at 1.3 1.13 million square feet, which is a record sales volumes that Kolte Patil has delivered. The company has also launched 2 million square feet across 6 projects in Pune and Mumbai. And why this is important is because they had a target of 3 million square feet that they were planning to deliver in FY23. Out of that, 2 million square feet has already been launched. So that is a big headway that they've made in terms of launches. Also, their flagship project, if you remember Life Republic, which was launched many years ago, has now crossed the 500,000 mark to a record volume of 6.62 lakh square feet, which is the highest ever in a single quarter. Now, the company said that they're on track to deliver a 30% growth in pre-sales for FY23, and the stock, though, still perhaps has some more headroom on the upside because it's still down 40% from a 52-week high. The company's also been doing a lot in terms of funding. Recently, it raised about 200 crores from a Japanese company, Marubeni Corporation, for its residential project in Pune. So lots of positive developments. But I think today the stock is gaining purely because of spectacular Q3 updates.
All right, spectacular Q3 updates coming in on Kolte Patil. The stock up almost 15%. But the other stock which is gaining, and it's the top F&O gainer today, is MCX. It's on hopes of some volume boost coming in from the new contracts after the SEBI has allowed multiple base metal contracts. Surbi joins in with a lowdown on what's keeping that stock afloat. Surbi.
Hi, thanks for that. So MCX will be in focus today, and that is because SEBI has allowed multiple contracts in commodity segment besides non-precious metals. They have allowed exchanges like MCX to reintroduce multiple contracts in base metals like aluminum, copper, lead, and also in crude. These contracts were earlier discontinued in Jan of 2020. Now, the change in the stance of SEBI is to increase investor participation and also to cater to all value chain participants. Analysts believe that this is positive for MCX, and it could lead to a 7 to 8% increase in their futures average daily turnover. Before it got discontinued in Jan of 2020, the base metal futures contributed 25% to their average daily turnover, and crude futures contributed in the range of 15 to 20% in their average daily turnover. MCX can also introduce mini contracts and options, which will further add to their overall average daily turnover. The only overhang for the stock is the technology transition from 63 Moon Technologies to TCS.
All right, Surbi, thanks a lot for that. The transition is something that everyone will be eyeing for now. Higher volumes is something that the street is cheering. In fact, that has been the kind of mood that we are witnessing on the street right now. The Nifty at just about that 18,000 mark, 20 points away from there. The Nifty Bank has crossed the 50-day exponential moving average. So let's see whether we see some further short covering on this or not, because FII longs had dropped all the way down to 38%. As we speak, HCL Tech has moved to the high point of trade. They had reported decent numbers as well. This morning, all the IT pack actually opened lower and now has risen higher. And as the markets have moved higher, what's also happened is that the fear is seeping out of the system, and that's reflected in the way the India VIX has fallen. The India VIX is currently now at the low point of trade, an absolute cut of almost 4.5% odd, but from the highs, it's seen a correction of almost 6.5% odd as well. So stocks doing well. The Midcap index just about in the red. Let's see whether it opens or moves back into green, and whether we see some further short covering from here on or not. We wrap up on this edition of Midcap Radar on that note. Your stocks when we return.